Welcome back. So the setup is more or less positive, and we're expecting that some of the green on Asia is going to rub off on our screens as well as we kickstart trade. But it's all about individual stocks and really what we can do. That's the implied open, 20 points higher. But let's talk about the individual stocks. And our team is standing by with the CNBC-TV18 list of top stocks to watch this morning. Guys, good to have you on. We'll start with Bharti Airtel, of course. Rima, numbers looking good?
Yeah, so operationally, it's a strong quarter in line with street expectations and driven by the tariff hike undertaken in early July. But at the bottom line, there is a miss because of an exceptional loss due to currency devaluation in Africa. So on the top line, the companies reported a consolidated revenue growth of 7.7% quarter on quarter, ahead of street expectations, and this is driven by a 10% increase in the India mobile business. ARPUs too for the company have gone up by more than 10%. And if you compare Bharti Airtel and Reliance Jio operationally on most of the parameters, whether it's an ARPU growth or the kind of decline we've seen in subscriber, the performance is slightly better than Reliance Jio. Bharti Hexacom too reported their numbers, and again, it's a good quarter driven by tariff hikes, revenue growth of nearly 10% quarter on quarter. EBITDA margins have expanded to approximately 50%. There is an ARPU jump of 11%. Profits, though, appear to be, reported profits are down because in the prior quarter, we had an exceptional gain, and therefore the bottom line is distorted. But operationally, both Bharti and Bharti Hexacom have reported strong numbers.
Okay, all right. Thanks a lot for that, Rima. Well, let's hop across to Vivek. He's here to tell us about a couple of numbers. JSW Infra and Suzlon. Vivek, those numbers a little bit of a miss?
Good morning. That's right. Both numbers slightly disappointing, slightly underwhelming, to what the street was factoring in. When you're talking about JSW Infra, we'll look at that one first. So very good volume growth. Remember, a lot of inorganic acquisitions. So that has led to strong volume growth on a year-on-year basis. So in fact, when you're talking about the cargo volumes up almost 16% on a year-on-year basis. But what is actually, slightly underwhelmed the street is the fact that it's actually the group cargo volumes that have been slightly sluggish, but the third-party volumes this time around have kicked in. Now, when you talk about the numbers themselves, revenues higher by 18% on a year-on-year basis, EBITDA up 48%, margins quite strong, 67.5% versus 53.8%, profitability higher by 46%. In the conference call, the management toned down its volume guidance by sticking to the lower end of the volume guidance band. Earlier, they had a band of 10 to 12%. Now they're sticking to 10%. And when you're talking about the third-party, volume share mix, it's jumped up to almost 46% versus 36% on a year-on-year basis. So that's a key positive as far as JSW Infra is concerned. Now, when you're talking about Suzlon, very important, what's actually happened is that margins have significantly contracted both sequentially as well as on a year-on-year basis. Very strong top-line performance. So when you're talking about the revenues higher by 47.5%, EBITDA up 30.8% on a year-on-year basis. EBITDA margins, when you're talking about the reported EBITDA margin, 14.1% versus 15.9% on a year-on-year basis and 18.4% on a sequential basis. What impacted the EBITDA? Cost relating to ESOP expenses, SAP implementation, a corporate office lease, and we'll have the management a little later on, and we'll have to get some clarity in terms of what will be the sustainable or the EBITDA margin trajectory going forward. But order book very strong at almost 5.1 gigawatt, also getting in an order from NTPC this time around.
All right. Vivek, thank you very much for that. And you'll hear from the Suzlon management in a bit from now. Financials were, of course, all the focus yesterday, and they are today as well. Federal and LIC housing. Let's go across to Abhishek. Abhishek, good morning.
Good morning, Prashant. So happy Dhanteras to you and our viewers as well. Federal Bank, they reported a good quarter. The net interest margin has come under pressure. It is at 17-quarter low of 3.12% versus 3.16% YOY. But take a look at operational strength that you are seeing in the asset quality vis-a-vis peers who are seeing deterioration in asset quality. So gross NPA ratio is perhaps at a 9 or 10-year low of 2.09% versus 2.11% in the previous quarter. Slippages have remained stable on a sequential basis, and the annualized slippage ratio is at 15-quarter low of 0.75% versus 0.77% in the previous quarter. And operationally, if you take a look, the operating profits, they have grown by 18.2% YOY, which is the best in last 5 quarters. With reference to the PNL, NI is slightly below our poll. However, the PAT is 6 to 7% ahead of our poll. LIC Housing Finance operational weakness continued over here. Disbursements were pretty strong, growing at more than 27% on a sequential basis. However, the AUM growth continued to remain in single digit on a YOY basis for now 7 quarters in a row. So AUM growth is just 6% YOY. Net interest margin continued to decline. 2.71% is perhaps at a 7-quarter low. Their asset quality improved. Gross NPA ratio inched down to 3.06% versus 3.29% in the previous quarter. Operationally, if you take a look, the operating profit declined both YOY and quarter-on-quarter as well. Provisions declined, which actually led to PAT beating the numbers. So NII, if you take a look, 1974 crores versus estimate of 2085 crore by Investec. PAT came in at 1331 crore, while Investec estimated at 1335 crore. Back to you.
Okay, Abhishek, thanks very much for those numbers. Let's look at Tata Technologies. Management sounding really cautious in terms of the commentary. Back to Rima for this. Rima, what do you make of it?
Well, it's a modest quarter. The company's reported a revenue growth of 1.6% in dollar terms. Constant currency revenue growth is 0.8%. Margins are steady at 18.2%. A little bit of a drop in the company's profits. But in the conference call, the company did talk about that they continue to see delay in decision making. US elections is throwing up some uncertainty. There's challenges with European OEMs, competition with Chinese OEMs in the EV space. That said, the order book and the pipeline continues to remain very healthy. Back to you.
All right. Well, that stock could pull back today. Irony that on the day of listing, it went to 1,300 rupees and now it's below the 1,000 rupee odd mark. So we'll keep an eye out on that one. But let's hop across to Sonal. She's here to tell us about IOC and IGL, and I believe both those two numbers are disappointing. Sonal, take it away.
Well, IOC is very disappointing, much lower than what the poll was suggesting. It was because of higher inventory losses, because of LPG subsidy, which the company did not receive, so they had to make an adjustment. Revenues were down 10%, EBITDA down 56%, margins halved on a quarter-on-quarter basis, profits in 180 crore rupees. But again, here there's an adjustment for reversal of provision created towards VAT input credit. If we strip off that, it would have been a loss for IOC this time. Refining throughput came in lower than estimates. GRMs at $1.6 per barrel, lower than estimates again. And the petchem segment reported a loss this time versus a profit last quarter. So it's an all-round miss for IOC. For CLSA has cut the EPS estimates by 6 to 20%, and Citi has cut the target price to 190 rupees a share after this number. For IGL, it was a mixed set. Volumes were at record highs, but margins came in much lower than estimates. Revenues were up 5%, but EBITDA declined 8%. Margins lower than 200 basis points, and profits were up 7.5%. Volumes at 9 SCMD is the highest that the company has seen on a quarterly basis. EBITDA per SCM, however, lower than the poll of 7.3 per SCM. Morgan Stanley says that the volume growth this time around was heartening. It is the highest ever that the company has seen. That implies that the impact from bus conversion to EVs is behind. There could be some red because of margin pressures, but there could be some green after that initial downtake we'll see on the stock.
Okay, all right. Thanks very much, Sonal, for that. Let's talk about Kintech, which came out with numbers as well. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. A good set of numbers coming in from Kintech. When we look at the revenues, they saw an uptick of 18% sequentially. This has come in nearly 6% higher as compared to what the street was expecting. All segments contributed to the growth in revenue, barring the global business services, in which the revenue dipped by 14%. EBITDA margin too expanded by 300 odd basis points sequentially to 45.11%. It has also come in much higher than what the street was penciling in. Again, out here, most of the segments have seen an expansion in their margins. Net profit saw an uptick of almost 31% sequentially, and this has come in much higher than what the street was expecting. Operational metrics also look quite strong for the company. Average AUM stood at 21.4 lakh crores. This is an uptick of 12.4% that we're seeing sequentially. This is more or less in line with what the industry grew at. Their share of overall AUM also rose by around 10 basis points sequentially. This is the 6th consecutive quarter wherein they've seen a rise. Share of equity average AUM was, however, flat at 33.4%. Additionally, the company also announced that the board has approved the terms of a JV agreement with CAMS for MF Central. So overall, a good set of numbers coming in from Kintech. The stock is expected to open higher today.
Okay, got that. Vamakshi, thank you very much for that. So let's quickly recap our list of stocks to watch today. Fair amount of green coming through. So the ones that have positive news flow include Bharti Airtel, Bharti Hexacom, Federal Bank and Kintech. The ones that have negative sentiment and earnings cues around them include JSW Infra, Suzlon, Tata Technologies, LIC Housing Finance, Indian Oil and IGL. Okay, so that's our stock list for the day. Let's figure out what the commodity cues are like as well. Manisha Gupta is joining in. Manisha, happy Dhanteras. Gold has been shining through the year, not just today. But really, what's top of mind for you?
Well, gold absolutely does, Surbi, because this Dhanteras is looking at gold at an all-time highs. We're looking at 80,000 rupees at 10 grams if you were to step out and buy gold today. You know, usually around Dhanteras and Diwali, people buy 20 to 22 tons of gold. So while perhaps the quantum could go down, but the billing will not because the prices have gained so much higher. But we are looking at stronger gains continuing in the day today as well because of the uncertainty from U.S. presidential elections. The markets also are awaiting the third quarter GDP numbers, the non-farm payroll data comes in this week as well. So this is a data-heavy week in that sense as well. And even as the dollar index is trading on a firm note, we have seen gold continue to hold around that 27.50 mark, which is just about $10 to $15 away from its all-time highs. But the other commodity to watch out clearly would be the crude oil prices. 6% of decline in the overnight markets, which has been the biggest one-day loss in 2 years. But we have seen a bit of a gain coming in right now into the markets, and this is after U.S. has suggested that they are going to purchase 3 million barrels of crude oil for their strategic petroleum reserve. Also, a bit of a decline in the dollar index seems to be supportive. And in any case, a 6% decline yesterday has led to some opportunity buying into the markets right now.
All right, Manisha, thanks a lot for that. And as always, I go according to your advice. So 1 gram of gold is what I'll be buying, Manisha. As you've told me over the last many years, I think 13 years, 13 grams because of Manisha. Thanks a lot for joining in, Manisha. Well, on that note, though, we'll slip in a short break. Up next, we'll connect with Abneesh Agarwal of Prabhudas Leela. He'll help us with some fundamental talk.